What's up, Cover Girls? So as you guys know, yesterday the Federal Reserve did increase the Fed funds rate by a half a percentage point. So 50 basis points was added to the Fed funds rate, which takes us to the highest number that's been, the highest percentage has been in the past 15 years. So it's going to be interesting to see moving forward where that number goes. Jerome Powell still, in terms of most analysts' eyes, his rhetoric still remains pretty hawkish, but we will see. What I'm very curious about is inflation did cool. So there were some positive year over year and month over month inflation numbers that came out. And what I'm really interested to see is, are we going to be again in that environment of negative operating leverage come next year? So obviously fixed costs are going up, interest rates raising another half a percentage point. If you're a profession or industry that relies a lot on debt, that's going to again be an input cost for you guys as cost of capital continues to go north. And for those at home that have seen, the retail figures today did not come back good. So the retail sales figures were not good. So on that, we really might be finding ourselves kind of in that negative operating leverage environment, given our fixed costs are going up. The labor data just came back this month in November, strong. So again, the labor market continues to remain very tight and very strong, which is going to lead to more and more wage inflation. So again, for the professions and business people that are watching this, your input costs are going to go up next year. What we have to be very aware of is our consumer savings rate is back to about 2.7%. It is sub 3%, which is not a very healthy number historically speaking. So if we do find ourselves, again, inflation's coming down, so there's fewer dollars that are going to be flowing through and fewer inflated dollars going through. So your nominal sales numbers are not going to look like they did this year with year over year growth coming through, again, just that deflationary dollar being spent. So more dollars just to equal what it was last year. So without having that, again, your fixed costs have gone up. And if the consumer is weak heading into next year, it is going to be interesting to see what this turns into. So stay tuned, but I did want to follow up on our first negative operating leverage video because 2 months in a row now, inflation is cooling off, and retail sales figures are starting to be an indicator maybe the U.S. consumer is not as strong as, again, we were when we were having all the quantitative easing and stimulus checks going around. So stay tuned for more. Comment down below what you guys were surprised with either the Fed raising rates. Do you think it needs to go higher? One other really big hot discussion right now is ultimately where's the Fed funds rate going to end? Is it going to hit 5%? Is it going to go north of 5%? Next year, are we going to be in such an environment where we already have to start decreasing or lowering our interest rates? Comment down below where you think this crazy train's headed, but it is a wild time out there. So keep your head on a swivel.